are you doing this morning? In fact, if you could, somebody give me a shout out. Let me know that you can hear me loud and clear. It looks like on my end that the audio is coming through, but always good to get verification from you guys. So hope we all had a great holiday weekend. Anybody do anything exciting? So I certainly did not. Well, other than hanging out with my kids and having a good time all weekend, that's always a good time though. So it kind of goes without saying. So, but let's get rolling and welcome out to the market mashup first. Glad you're here. We're going to have a little fun over the next little while. All right, thank you. Sound is good, I hear. So let's get the legal stuff out of the way. And y'all should know this by heart by now, right? We're not registered broker-dealers, investment advisors. I'm not going to give you any recommendations or advice. Everything that we do here is purely educational. If I talk about trading and I forget to say unfunded or practice or paper trade, assume that it is. Those are the only types of trading we talk about here. For regulatory reasons, we do not talk about funded trading. So, but as most of you know, if we're trading seriously, then we practice in the exact same way that we do for real. So the last paragraph says we're also not subject to trading restrictions, so I could be in a trade, out of a trade, thinking about a trade, looking at a trade at any time. So for those of you that may be new to the mashup, there is the agenda for the next hour or so. And I see several new names, which is always good. So welcome out. And if you're looking at the screen and saying, well, it's blank, that is the agenda. There is no agenda here. We talk about whatever we want. And that's what I think's made this class fun. So anything you have in mind, any questions you have, whether it's strategy related, options related, technical analysis, mindset, we usually kind of drift into those areas, mainly because technical analysis and mindset are the two things that I am most passionate about. And in reality, they are one and the same, essentially. I know some people say, well, that doesn't make sense. How come it's, but wait a minute, charting is nothing more than a visual representation of the emotions of the traders. And so when you learn to read the charts and you learn to recognize the patterns, you can start to see behavior patterns in not only the charts, but in the people that are trading those particular stocks. So it's interesting to take the two and recognize them as one and the same. So, and the funny thing is, if you guys don't give me anywhere to go, then I'm going to go wherever I want and do whatever I want. So, which is not terribly difficult anyway. So, but there we go. All right, Brenda's going to start it off. Awesome. Ooh, good question. Brenda's question is, what signs do you look for and use to confirm a change from bearish to bullish? Pretty simple answer. Looking for patterns. Any kind of pattern that gives an indication that we've changed directions. Now, with the market the way it's been, the last few days have been kind of crazy. Not kind of crazy, just super bullish, which isn't a huge surprise because we were pretty oversold. So now the question becomes, and it sounds like you're trying to figure out, do I switch from bearish to bullish at this moment in time? And I would say that today, right now, is not necessarily the best time. At least it doesn't appear to be. It could be. I mean, this thing could just keep on running. So it's really hard to say, but there's not really any indication. In fact, let's go look and see. Where'd my chart just go? There we go. We just go look at the S&P. And I would challenge that statement, Brenda, saying still getting caught in puts when I should be in calls. Why should you be in calls? Just because the market's going up for a few days? Or is this just a rally based on the fact that it's super oversold? Was there any indication to switch and shift gears from puts to calls? There's some. I mean, there's no doubt there's some indication and there's some justification for either scaling back on the amount of puts or getting out of puts altogether. But I'm not seeing anything that says to get bullish and be in calls. Maybe, maybe a little bit, maybe having some trades there that, just to balance things out a little bit. But, I mean, if looking at this chart, the S&P that you see right now on your screen, we have, excuse me just a second. It just seems like clockwork. This cough is pretty much gone, and then it's been fine for the last few days, and now all of a sudden it's kicking back in a little bit, but that's all right. We'll fight through it. Looking at the chart, the S&P here, there really isn't anything that I can see here. I mean, Brenda, you know patterns well. You've had patterns in Flash. You've studied it. You are well aware. Is there a pattern here that says we're bullish? I mean, is there any kind of? That's not really a hammer. I mean, let's get even closer. There's no hammer pattern there. I mean, yeah, we tapped 1815 for the second time. We've got kind of a tweezer bottoms if you go back to January 20th, that big down day where it bounced. But there's really no pattern here to suggest that we're going to bounce. There's nothing there that says we're going to reverse to the bullish side. And then when you look at the volume relative to what the average is, the volume's been light the last 2 days. So I don't consider this to be bullish. Is it a rally? Yeah, we're looking at day number 3 now. But that's kind of what rallies do, is they rally for 2 or 3 days and then they turn back over and they drop off. I mean, let's just take this chart for example. You look at almost every, if we go back, I mean, here's 3 days of drop and then it bounced. You got a big up days with a little one in between, 3 days of drop, then a stall out day, 3 days to the upside, then it dropped for 2 days. I mean, there's not, you can see here, there's not really any more 3-day periods that don't have a day after. There's kind of 4. I mean, there's 3 there, and it bounces up. So, right now we're in a 3-day rally, which is, in my opinion, nothing more than just a retracement of the downtrend. Because the downtrend is pretty clear at this point. It is essentially, it's gone from, in my opinion, we've gone from bearish because we were making new lows to neutral because we're back above the 1867. But I would not say that we are bullish at this point. Does that make sense? So hopefully, it's pretty clear. So just because, gosh, I'm sorry. And of course, I don't have my cough drops right here. Usually I have them handy sitting here. Just keep chugging water and fight through it. So in other words, just because the market makes it move one direction or the other does not necessarily change the sentiment behind whether it's bullish or bearish. I think is probably the easiest way to say that. So, but considering we're short-term traders, I mean, you look at this and go, oh, I should have bought calls 3 days ago. Yeah, woulda, coulda, shoulda, and that's the syndrome that's hard to beat. It's easy to look at it now and say that, but the question is, will this rally continue? And as you see, as I just showed you on the chart, there's not many, and you can look at almost all these, and there's very few 3-day periods that continue. And yeah, we've got Maribozu's the last 2 days, and so far the markets have Maribozu as of right now. But will that keep going? and in my opinion, it's probably not going to. Okay, Aaron, let's see. It's on a monthly. SPX monthly chart has wicks hitting the same area. Okay. Interesting. I don't know if I've ever looked at it like this. I'm looking, Aaron. Let's see. 17 to 20% retracement for long-term fibs from '08. Talking about the bottom of '08? I guess I'm not seeing what you're looking at. And I don't really use fibs much. I really don't use them at all. I'm familiar with, and I played with them years ago, but hmm. Oh wait, I think I see. Here, I'm gonna throw this on here and tell me if I'm seeing yours right. If you're going to the shadows or not, but this is probably close. I'm guessing there. Is that what is? I don't know if that's what you're looking at here or not, but you talking about the '09 bottom? I'm looking at the '08. Oh, that makes more sense, I guess. Whoops. I'm from down here to here. Yeah, see, I use fibs so little, I don't even have the things on there. 20%, or is it 20%? It's 0.25, basically. Close enough. Okay, yeah. So it's basically 20% retracement. Do I think it's a bullish bottom? Hard to say. I mean, a monthly chart is, this is more of a long-term thing. But if we're going to look at this, here's what I would say is you look at, in fact, I just watched a short video this morning about, there's a gentleman describing, going through this whole thing about the interest rates, the way they've been, and how it's affecting the trend, and points out the head and shoulders in the market and the interest rates and how interest rates are and how things are globally. It was very interesting. He was talking about the potential crash of this year, and we've got a lot of the same signs. And he showed something I had never seen before, which was that we have recessions anywhere from 2 years to 9 years between good periods or expansion periods, if you will, into recessions are anywhere from 2 years to 9 years, and we're 7 years into this expansion from '09 to, well, we're in 15, so basically 6-7 years into a bullish expansion of growth period. And the longest, and we're talking, I think it was since 1960, maybe the 40s that he was looking at. So the longest period we've had without a recession was 9 years, which historically there's a recession every decade. So we had '07, '08 last time. The longest period that we've gone without being in a recession was 9 years. I mean, we're right there. And realistically, you look at the chart, it's pretty extended. I mean, you go from the lows of 750 in '09 up to, I mean, it's essentially tripled in 6 or 7 years. Now, at least for me, I find it hard to believe that all these businesses, I mean, thousands and thousands of publicly traded companies have, I mean, realistically, you've got to, in order to justify this price level, the companies had to have tripled their earnings. And we're talking about, I mean, generally speaking, broad-based on the entire stock market. So in other words, to justify the valuation, and I'm not a fundamental guy, but at the same time, I mean, there's legitimacy in the fundamental part that earnings have to be there in order to justify a certain price, or the perception of potential earnings in the future is really what it is. So I guess the question becomes, in 07, 08, maybe it was completely oversold. So maybe a fair valuation for the market was 1,200, but we're still almost double that. Excuse me. I mean, are companies really, in 6 or 7 years, have they doubled in value? I find that hard to believe. I suppose it's possible, but there's just so many different signs that point to a drop, not to mention the fact that we have created new lows. And you can see here, getting back to a daily chart, just over the last year and a half, 2 years, we broke that 1867. We've closed below it significantly, and we are, well, let's see, where's it at right now? We're 1922 right now. I don't know what that is. Should we go look? So that's where the market is right now. Excuse me. What just hit? Let's go see. Oh, Chevron, that hit earlier today too. Where is it? Let's organize these. It's there. It must be over here. Chevron's heading. Ooh, that's not that bad. This actually looks kind of good. But there becomes the question is, will it keep going? So, I don't know if that answered your question or not, Aaron. I mean, the only way realistically to get a bullish look from here is to have a continued, we got to have some type of pattern that shows that we've bottomed out. And the only one that I can see happening from here where we're at would be an inverted head and shoulders. So in other words, what I think would have to happen is we come down like this, and then we'd have to break out. Well, let's see, wait a minute, that's, oops, that's not what I wanted. So we're right there basically today. I forgot. Let's do this. Oh, come on. That's where we are today. So let's say it does this. That is effectively what I would see having to take place for me to get bullish with this market. Excuse me. So we got to have some kind of indication, some kind of pattern, some kind of sign that says that the downtrend is over. Because right now, we are officially in a bearish trend. We've got lower lows and lower highs. It's that simple. So technically, it's still bearish until we get some kind of pattern, some kind of indication. Take that off. That direction has changed. Yes, Brenda. I'm going back. I know I'm going back to your question, but so I've been right to look at my puts, but I've not had any entries hit. Yeah, I mean, if you're bearish, basically we have to come up with a stance on the market. We have to have an opinion and an analysis that says, are we bullish, or are we bearish, or are we neutral? And we've actually, in a lot of ways, become somewhat neutral since, I mean, over the last 3 days, the market has become neutralized because we're not, well, we still have lower highs and lower lows, so we're still bearish. Still longer term, even the shorter term trend is down. But considering we've broken above the 1867 level and we didn't stay below that, I think that lends a little bit more of a neutral stance than an outright bearish stance, if that makes sense. So in other words, I'm a little bit less bearish, but overall I'm still bearish because we still officially meet the downtrend definition. Good, Aaron. and says, yeah, I was just staying neutral with my thoughts. And that's always good. And that's really the place we need to be, is we need to try to stay as neutral as possible with respect to, well, objective, I guess, is maybe a good word. We need to make sure that we don't get, and that's the easy thing to do, is to get biased. That's why one reason I don't pay that close attention to the news anymore. I used to watch it all the time, but I found it was affecting my decision making, so I stopped listening to it. And it hasn't changed anything for me. Actually, it's made it better because I don't hear all those things in the background. I don't hear all the talking heads, and you hear this news and you chase things, this and that. I got to go find this. I got to go. What about this? What about that? So and so just talked about so and so company. So I want to go see if there's, I think from last week, where do we go? I think that's it. See if there's anything that's exciting happening right now. There's a question I have. Excuse me just a second. So let me ask you all this. I'm just curious. If you're going to come to a 2-hour class, because I'm going to do a 2-hour class next month, about 5 weeks from now, what would you want to learn about? Technical analysis, mindset, strategy. And I've got to get an answer in today because we're doing some classes. So I'm really curious to know what you all are interested in. What is it that you would like to learn about? Because I love it all. I mean, you all know that technical analysis and mindset are my two passions. And again, they're basically linked. They're one and the same. So my natural inclination is to go to one of two of those, or maybe something that's, basically together. But I really was curious, and considering I have to get an answer in today, I thought, why not ask you guys? What do you guys want to learn? What are you interested in? What would be something, if it was a 2-hour online class that you had to invest a small amount in, what would be the number one topic you would like to touch on, to spend 2 hours talking about? So if you got about 30 minutes or so to let me know what your thoughts are, and send them through the chat box if you would. So I'm just curious. So let's see. I'm going to go over here to the Core 30 actually and see if there's anything exciting going on. Let's see. Amgen. Ooh. See, I love. There's Goldman just hitting. You can see all this green. I know this is the interesting part. This is when it gets tempting to jump in bullish, right? You go, oh, everything's getting bullish. It's getting bullish. It's good. But we're on a 3-day run. Is it really going to stay bullish? And it might. It might keep running. But in my opinion, today is a perfect day to actually get into bearish positions. Because number one, we're on a third big up day, which means the likelihood of a pullback tomorrow is higher than not. Odds are increasing of a bearish move. The VIX, I'm not sure exactly sure it's down. Yeah, it's down. It's about 23. See top left there, it's down 103, so it's at 23. So the volatility has dropped off, so the pricing on the options have settled down a little bit. And you take something like this, see Amgen looks absolutely beautiful right now. I mean, it's gapped up 4 days in a row, and typically the initial part would be, man, it's running, get into calls. But look at what's happened the last time it ran up and hit the 20-day moving average. It danced on it a few days, but it eventually fell off of it. So is now the time to buy calls, or is now time to buy puts, or neither? I think a day like today is a great day to at least look at getting into bearish positions for those specific reasons. But then again, I mean, there's the risk to it though as well that this market could just keep on running. It could just keep running to the upside and get more and more bullish. That's possible. So you may get stopped out. You may take some hits right away, day one. So let's see. I'm just looking through some of these to see if there's anything that's decent right now. There's Alcoa taking off. And this is, this I know people are like, Alcoa, that's an $8 stock, $8.50 stock. Well, yeah, look at it. It was $7.50 just 4 days ago. And granted, there wasn't, you could look at the Morningstar, okay, it was $7.55. It's now $1 higher. But that's 12, 13% in 3 days. 12 or 13% moves pretty good. Amazon, it's bouncing up. It's been extremely bearish since earnings. I mean, we dropped from, 650 down to 475. So it's a huge move. And yeah, it's bouncing back up. Yeah, I know. So I'm just looking here real quick to see if there's anything that looks exciting. But there's the hard part. I mean, these things have run. You see, here's another example, Anthem. A week and a half ago it was 117. Now it's 127. It's approaching the 20-day moving average. Is the bullish run going to continue? So going back to what Brenda's talking about, well, it's, it should be in calls. Well, not necessarily. This might be a time to maybe not be in puts, but hang out and wait for an opportunity to get back into puts if it turns back over. Bluebird Bio. This is an extremely volatile thing. This popped up on the radar earlier this morning when I was looking. Big biotech. And you can see the last couple of days have gone crazy. The bands are pinching big time. And this one may be, we'll see how things close out today because we're really going to have to wait for the close because it's hard to say what could happen. This thing, if we go off of what happened last week, I mean, this thing's up 27 right now. It could close down 20 by the end of the day. Berkshire. Caterpillar, and you can see, I mean, here's another example. Caterpillar, yeah, is breaking out to a new high, but you've got 4 up days in a row, gaps in between. The odds are, and most of you that know me well, know that odds are everything, and the odds of this thing continuing to run to the upside without either a sideways move or a pullback are pretty slim. Seldine, just looking for something interesting here to see if there's anything that. CMG, there's Chipotle. We were talking about this way back here in early January, huh? And that did make a nice move, and even a longer-term trade, this was, at least based on the last 4 days. Of course, if you got into a long-term trade back here, January 13, you had a couple of days of run, and then you had to sit on it for a month and be like, and you're probably freaking out. Now today, you're like, woo, finally, right? And it's hard sometimes to hold through those periods. I typically don't. It just depends on the trade. I don't do very many long-term trades, but going back to Alcoa. So here's another perfect example. CRM, you can see how bearish it's been. I mean, it was 84 back 2-3 months ago. It just hit basically 54 a week ago. Huge sell-off. I'm assuming that's earnings related. There's no E here, which typically there is on eSignal, but huge sell-off there from 68 to 52 in just a couple of days. It's got to be earnings because of the volume size, and then a big bullish engulfing pattern that creates a rally to the upside. But look where it is today. I mean, it's hitting not only the previous gap, that window that it opened, but it's tapped the 20-day moving average, and as you can see down the bottom right, the intraday chart, it went up and hit it. I mean, we're talking in the last 15, 20 minutes, about 30 minutes ago or less. It went up and tapped it and then sold off real quick. And yeah, this candle right now is up. And then look at the volume spike. Let me blow that big. There's the intraday chart. That high right there, make that even bigger. That high right there that just happened on the last candle was the 20-day moving average, basically 64.50, 64.40. And look at the volume spike on it. So was that, and this is the question that we don't know an answer to, and it's basically impossible to get. Was there a big sell order up there at the 20-day moving average, or were there a whole bunch of sell orders, a whole bunch of bearish sell orders up there at 64.30, 64.50, somewhere in that range, that created that big volume spike and the quick sell-off? The reality is we don't know. There's really no way to find out. And that's where the question of, how are things going to close out is going to get big. But this is a textbook resistance level of the 20-day moving average. When it's selling off like this, it bounces, it retraces back to the 20, and then rolls over from there. It's fairly typical. So going back to Alcoa, though, I want to be sure I'm clear here. Oh, from 777. Okay, so about right there. Oh, really? Okay, now I see. I was trying to figure out that. So she said the options, when Alcoa was at 777. So in other words, come on. When did I go? Alcoa was right there, and today it's 8.55. The options, the March options were 98 cents. Today they're $1.55. So that's 57 cents of profit on basically bucks. That's, well, let's just call it 55%. It's a 55% gain in 2 days. 55%. You're talking a buck basically. We'll just round it to $1. $1 for the option. Now you can go trade the big high flyers for, Google or Amazon for $40 a contract, or you can trade Amazon for $1. Now if you're playing with a lot of money, then just do 40 contracts versus 1. It's the same amount of money, right? You still have a 50% increase basically. So yeah, that is one of the reasons that I love Alcoa, because even a small move, while it doesn't look big, or it may not be huge, these huge crazy numbers, the rates of return are awesome. So you get back to this deer. Deer's been pretty bullish the last few days. Diamonds, that's going to be a shocker, seeing there's the gaps. And there is, the diamonds, obviously the ETF for the Dow. There's the big kicker. Is the question is, will it get through that? Will it stay above this line? Will it stay above the previous highs of the bounce? Are we going to have a legitimate double bottom here or not? And hard to say. We'll have to wait. I mean, we're only 2 hours into the market. We have another, 4.5 hours to go? Expedia. Just looking at Facebook, obviously going kind of berserk today. And you can see how crazy and erratic it's been on some of these things, like Facebook. I mean, there's an earnings gap, obviously, but then it comes back and closes that window, fills the gap, and then it's basically been going sideways for the last week and a half. And today it looks pretty bullish. But a lot of it depends. We're still in the first little bit. You can see the volume looks pretty solid the first hour and a half or so. It's starting to slow down a little bit right now. The question is, how will it close out? If it closes out with light volume, even on an update, that's still bearish, right? Google, not a big fan of Google. Not their stock nor the company. Unfortunately, kind of stuck. I mean, they are the 8,000-pound gorilla, right? Well, there's really no way to escape them in a lot of ways. But, yeah, some of their stuff, I mean, their operating system on the phone, I got to hit like 5 buttons to make a phone call. It's like, wait a minute, I thought if we're driving, it's supposed to make it easier, right? And you got the whole voice thing, but the voice thing, at least on my phone, doesn't work well. It doesn't recognize what I say. I don't know if it's Google or if it's the phone. I can't imagine it's the phone. I mean, the hardware's the hardware. But then again, who knows? So I have challenges with Google constantly, it seems like. So, and years ago, I tried to do business with them, and even though I was trying to give them money, they basically just were like not interested. No customer service whatsoever, and I've heard that from many people. Their customer service is absolutely terrible, unless they've changed it in the last 4, 5, 6 years. But yeah, absolutely terrible customer service for Google. But that's the hard part is they have the technology that drives it. They have the technology that makes possible for what they do. They don't have to have customer service because they have the technology. They have the whole market cornered essentially. So anyway, um, a bunch of questions coming all at once. So yeah, I agree, Scott. It would be wild if we got an actual double bottom on the SPX. I'd be pretty surprised. But it's possible. I mean, anything's possible. So um, what was I think I just missed one there. There we go. Oh yeah, minutes come out later. Yeah, be interesting to see if that moves anything or not. Do I think Facebook will be the new Google? Probably not. Uh, I mean, you never know. I think there's no doubt that the potential is there. The question is, will they get there? But Google's in so many areas now. I mean, search engines, cell phones, operating systems. They're basically competing with Microsoft now. I mean, they've blown away Microsoft essentially. Microsoft was the search engine, the software. Microsoft was everything, and Google's essentially Microsoft had no competition until Google came along, and actually Google has absolutely destroyed Microsoft when it comes to, I mean, Microsoft Windows phones. How many of you have those? I don't know anybody that has one because they're just not that great. Uh, I mean, I've got a Droid. I'm not a big fan of Apple, so Apple products. I mean, everybody says it's you're either all or nothing. It's people that have Apple say they love them. I've tried them. I played with them a little bit, and I just wasn't a big fan. And I don't like the fact that if you buy an Apple product, you have to have Apple peripherals. You have to have everything Apple. That's where it's either all or none. There is nothing else. If you go Microsoft or Droid, at least you can use normal stuff. You're not locked into one particular company. So, um, I mean, Apple's a great company. They've done some great things, and they make a fortune. You look at, I mean, the App Store they take a huge chunk off of all the apps that are done. It's kind of crazy. But Google's in the same boat. I mean, Google's literally competing with Microsoft and Apple. They're all kind of the same. So it's almost like a combination of Microsoft and Apple is what you have with Google, at least the way I see it. So kind of crazy. And interestingly enough, I just saw something, was it last night or the night before? I was watching something where Sergey Brin, one of the founders of Google, is working on creating a what did they call it? Cultured hamburger, I think it was called. They put this fancy name behind it. A cultured hamburger. Anybody have any guesses what a cultured hamburger is? Yeah, if you guess the Petri dish hamburger, you got it. Essentially, they've taken stem cells from cows and created a hamburger from that. It's kind of crazy to think about. Everybody's talking about GMOs now, and they're freaking out about GMOs, genetically modified organisms, or whatever they're called. They're genetically modified. Can you imagine eating a hamburger that was basically made just from stem cells of a cow? It's not actually meat. It is genetically created. I mean, it's genetically grown by man. I just think that sounds kind of crazy. But that's what he's working on because he wants to, save the animals, and which is fine. I mean, if that's your shtick, then go for it. But yeah, I don't know. I'm a meat guy, though. I love my meat. So yeah, the Surface, Microsoft, which I've heard good things about the Surface. It's their tablet / computer, and everybody's trying to get into these hybrid markets and everybody wants to create the next big all-in-one product, something that everybody wants, that everybody needs, that everybody's going to have, and that's all they want. I don't know that that's ever going to happen, because there's things I can do on my phone that I can't do on a tablet or a PC. There's things I can do on my PC that I can't do on my phone. So I don't know if they're ever going to have that combo type of deal. They're going to get close, but I don't know if it's ever going to really work. So thank you, Thomas. I appreciate that. He said, I would just like to say I'm enjoying Patterson and Flash, enjoying the quizzes, which frankly has just kind of blown my mind, because I hear that often. A lot of people say, I love the quizzes. And being one that never liked getting tested, but at the same time, they do serve a good purpose. And that was the reason I put them in there, is even though I don't like getting quizzed, I don't like being tested, it's a great way to get feedback. I do love feedback. I love finding out, hey, what can you get better at? And that's really what the quizzes are for. Really, I didn't see that. XLE, is that a... No, what is that? Is it just XLE? Oh, yeah, it is. Okay. That's a double bottom in the XLE energy oil sector. Where is it at right now is a question. Will it break out of the midpoint is the real question, right? Where's my S? There we go. Whoops, that's not what I wanted. XLS, XLE. Where's that right now? 58.50. So it's through that point, actually, huh? Well, wait a minute. What's this right here? 58.22. Oh, 57.50. I'm $1 ahead. So, yeah, it's got to get through there first before it's technically a double bottom, right? Here's one that's been a surprise: GoPro. I don't know what the deal is, but this thing was, I mean, it's not that old publicly. I don't know how many of you have followed GoPro, but brilliant marketing strategy, killer product, taking advantage of the expansion of memory cards and expansion of all the video stuff that's going on. It's basically a video craze. It used to be, pictures. Well, nowadays, if you don't do video, if you don't have something on YouTube, then you're nothing, right? It's kind of crazy, but GoPro is really jumping on that and taking advantage of it with videos, and they're awesome. I mean, you get a camera for, I don't know what they are, I haven't bought one, but $100, $200, $300 to get a camera you can mount on a helmet, and you can have video of whatever it is you're doing. And so you get you can now get a bird's eye or a realistic view of somebody experiencing something. And I know people that have used them for several years now. We go snowmobiling up in the mountains, and we used to watch video of rides after the fact. You go videotape 4 hours full of rides, and then go sit and watch your ride after you've done it. And then if there's something cool that happened, you put it on YouTube, and you make get 1 million, 2 million hits, and that's been commercialized. And that's part of the reason for it is that if I don't know exactly how it works, but that's one thing most of you probably are aware of this, and I remember learning it a couple of years ago, where if you get over a certain amount of hits, then YouTube starts to pay you royalties on the advertising. So I don't know if it's royalties, I don't know how it works exactly, but you get paid based on the advertising revenue that they get from your videos if you hit a certain number. And so what that's created is this craze of people that, you know, they want to put a crazy video out that gets a ton of hits. So, you know, that GoPro was almost $100 out of the gates. It came out at, well, you see about 30, and it rallied to 50 in just the first few days. Settled down for a little bit, and then rallied almost, almost hit 100. And it's been in a downtrend ever since. It's down $10 now. I mean, it's what, 12.78. But yeah, it was what, $10? It was $9 just a week and a half ago. So, um, interesting. Really, Thomas, he said a lot of guys driving motorcycles usually for insurance purposes. Not sure what you mean specifically. I mean, I've got lots of thoughts wondering about it. Um, there's the diamonds just hit an alert. What did it just hit? Oh, interesting. It just hit the double pot. We're sitting right there. There's the diamonds, right? The Dow Jones Industrial Average. We just hit that. I just put that line there, which this is the nice part about eSignal. If you go into your lines, if you drop a line on here, you can have it automatically as a default be set up as an alert as well. So that just happened. I put this line on here at the 164.39. It just hit an alert. So now we come look at it. So we're sitting right on the edge of breakout of a double bottom for the Dow, which most of the other markets are going to be about the same. So we will see. Looking at the intraday chart, 15-minute chart down in the bottom right corner. Decent amount of volume in the beginning, even though it dried up as it rallied, and volume's kind of dying off right now. It's pulling back a little bit. So where this market closes is going to be a big deal. If it could get above that level, then I would say we've turned, at least on a short-term basis, bullish. But if it can't get above that level, if it fails there and if it drops from here, then I would say we are bearish, mostly bearish, maybe slightly neutral, but for the most part bearish. If we fail to get above that point, close above it, I should say. Let's see. Okay, that's one of the things I was thinking of, Thomas, to show if they were not a fault in an accident. Yeah, I just thought they probably, when you said that, that's what I was thinking of, because I was thinking of there's a commercial on TV now of this, what's it called? I don't remember what they call it. It's a little video, the dash cam, that's what it is, the dash cam. And it's like $20, it's a little 30-second spot commercial that you could buy the dash cam, or maybe it's $40, but it mounts on your window, and you can turn it either way. You can either record your kids in the back of the car, or you can have it recording as you're driving going forward. So if there is an accident, then you have a recorded version of it so you can prove your case if you weren't at fault. So those are getting big. A lot of it has to do with the storage capacity now that, video, you can compress your video, and the SD cards are getting big. I just bought a 64 gig card for $22 or something like that. It was on sale, but I don't really need this thing, but it'll come in handy. So, and for $22, it was the steal. It was normally like $60 or something. So it's like but now that capacity is there, you can do that. And I know commercially it's being done a lot as well. A lot of companies are employing it. Companies that have vehicles on the road. I mean, like, I don't know if UPS and FedEx are, but I'd imagine if they haven't, they're at least looking at it or implementing it. I would imagine at some level. Because it does. If you can have a video, I mean, it's like having surveillance. I mean, a grocery store, a retail store, a bank, all these places have surveillance, but you can't have surveillance on a vehicle, right, that moves. Well, at least you couldn't 5, 10, 15 years ago. Today you can. So essentially, you can take what we have today in a stationary building with surveillance, and you can essentially implement it onto a moving vehicle. So, and it makes sense from a protection standpoint, from a liability standpoint as well, for companies to do that. So companies like GoPro should realistically do exceptionally well over the long term. But obviously there's either something wrong with GoPro, or the market's maybe not as big as it seems. Or the competition's coming in and beating them up. Who knows? So, yeah, exactly, Aaron. So soon you get that size card cheaper. I've seen was it 256, I think, but they're still. I think it's been a while since I saw it, so my memory may be failing me, but it was $150 or something like that for a 256 card SD card. Um, rumor has it, I mean, I saw a rumor about a year ago that they're supposed to be out with terabyte SD cards here soon. They're probably out. It's just not mainstream, so that's what I'm guessing. But yeah, the storage capacity is just getting bigger and bigger, and then the cloud, I mean, adds to it. So yeah, exactly. You're dating yourself, Aaron. You are dating yourself because 1 gig was huge, and 56K used to be awesome. It was dial-up speed. Oh, Thomas, notice there's a square with an E. Does that mean earnings in the red? Yes, the little E with in red is earnings. Now that doesn't mean that the red is just a color. It's not. It doesn't signify anything that I know of. The 128 is what their earnings actually were. If it was negative, if they lost money, it should be negative. I think GoPro is. Yeah, see, negative. GoPro lost a quarter per share, whereas Goldman Sachs made a buck 28 per share. So, which is nice. It's nice to have that right there on the e-signal chart, so you know when earnings was and you know what they did, even though fundamentally I could care less. I am dating myself, huh? I am almost to the hill. I can't believe it. Um, yeah, I know. We're both dating ourselves. You know what, though? I think you're getting older faster than me. I hear that all the time. People say, "Oh, you're getting old," because I'll be 40 in April. So um, it's kind of crazy to think about. I don't feel that old. And it's kind of crazy to think that it's been almost 16 years because I had just turned 24 when I stumbled across the market. It was April 3rd and 4th of 2000 when I found myself sitting in a workshop. And I'm like, what is this? This is awesome. And by the end of the second day, I was just in love. But it's crazy to think it's been that long. And okay, that means we're about the same age. But yeah, people are like, oh man, you're getting old, especially those that are younger than me. Even my son the other day said, you're getting old, Dad. He's 9, right? So yeah, but you're getting old. You're getting older faster than me. And usually people look, they go, "What do you? Huh? How's that work?" Uh, it's percentage-wise, and I'm talking about a percentage, right? Because if the day you're born, you're nothing, right? You're 1 day old. The next day you're 2 days old, so you've doubled in age. The next day you're 3 years old. Your age has increased by 33%. So in other words, the younger you are, the faster you're aging on a percentage basis. I know. Y'all know that I'm a little off. But at the same time, it's fun to watch people's facial expressions when you say something. When they're younger than you're getting older faster than you. They go, what do you mean? That doesn't make sense. But how to set that up? I honestly, Thomas, I have no idea. I thought it was a default on here. Let's see if it's in here somewhere. I don't know if it's in here or not, quite frankly. Chart properties, maybe. Earnings labels, there it is. See, it's just a matter of finding it. So if you right-click on the chart, you go to Edit, Background, and Grid. Down at the bottom, there's 5 different things that are earnings labels. There's also split labels, so that's where to find it. funny, Aaron. Now, let's go see if there's anything worth looking at here. And this is the hard part. And quite frankly, this is, just to wrap up, I've only got a few minutes left. But the hard part about times like this, and Brenda kind of hit on it right out of the gates, is that things are rallying, and it looks like they're getting bullish, and maybe they are. But there's really no solid indication that things have changed directions. We're still technically bearish. So even though it's hard to watch this, and if you're in puts, it's like, and maybe you're freaking out, but it's a question of, will the rally continue? And there's not a whole lot of signs that say that it will. But who knows? I'm just looking for something here that looks good enough to do anything with, but so far it's, well, there's Netflix is a good one. There's, we're sitting right at the 20-day moving average. We've had a decent amount of volume first thing this morning, but it's bumping its head against that. And you can see what happens here. It broke below it, back here in the middle of the chart, broke below it, dropped off, rallied back up, tapped it 4 days in a row, and then it dropped from there. I mean, it went from, well, it was at, basically 116 to 80 in a month or so. That's a huge move. And could it do that again here? Could it just sit here and tap the 20 and go sideways and then drop off down to $70 from here? Very well could. I mean, that's about where, that's the next target is 70. There's not much to stop it from dropping down to 70. So not to mention the fact that we are, well, we're a little bit above that. But the lows right there about 91, 90, 91, where it broke, are being challenged. So if it closes above there, then okay. But if it sells off from here, pretty decent likelihood Netflix will probably head lower. So let's see, Oasis. It was hard to tell. The spiders, there's spiders, of course. And again, just like with the diamonds, you've got what could be a double top or a double bottom. But then again, you notice here, I mean, we've run from 182 to 192. It's run 10 points in 4 days. Odds are that it's going to drop off. And to have gaps like this in 3 days in a row, big gaps to the upside, just not likely to continue. So, but that remains to be seen. I was wrong once before. Okay, more than that. Tesla, there's another one that was that show I was watching. They were talking about the, what's his name, that founded Tesla. Nicholas, Nicholas, what's his name? I don't remember, but he's doing all kinds of stuff with SpaceX, and he started SpaceX, and he's got all kinds of exploratory stuff. So I'm not saying anything spectacular today, really. So I love it, Thomas. He says, I'm going to be 21 in March, but my mind says I'm 21. No, I'm not going to tell people how old you are. I mean, it really is just a number, right? And the funny thing is, my grandma, who, God willing, will be 94 in June, that's the attitude she has. She's just, it's just a number. She'll say that. It's just a number. Of course, she's been slowing down the last 2 or 3 years, which, I mean, how can you blame her? I mean, she's in her 90s. And she's in a home right now because she slipped when it was icy about a month and a half ago. She slipped and broke her wrist and her tailbone. Apparently getting the newspaper for the day was important enough that you have to go out on this slippery ice at 93 years old because I'm in a hurry to get the newspaper. I kind of chuckled with it. I go, what were you thinking? I just wanted to get the newspaper. They call your neighbor and ask him to get it for you, or wait until it thaws out. But she didn't think it was as slippery as it was, I guess. So, but an amazing lady. So, has seen a lot of stuff in her life. So, born in 1922. But with that, I got to wrap up. So before I do, real quick, those of you that maybe aren't familiar, because I do see some new names here. It's awesome to have you with us. But I have 3 different tools. The Market Insights, which is basically video commentary, 2 or 3 days a week. I basically go look at the market, kind of like we've done here. We go analyze the market, look at potential trades, look at candidates, find patterns. I'll give you my opinion on the overall market. I'll show you some higher price stocks. and then some lower price stocks as well. So I basically do 3 different videos during the week. A market update, big guys, which are candidates, potential trades for higher price stocks, and then little guys, which is potential candidates for smaller price stocks. So a quarterly subscription is $7.95. Also, the other 2, which you heard Thomas talk about, and he's 11 patterns in a flash, it's $229 a quarter. It's all technical analysis. Patterns in a flash is not only their flashcards, which are designed to train your eyes to recognize the patterns on the right side of the chart, which is what I struggled with when I started. And then there's 6.5 hours of video on there. Not only is there the foundational information about technical analysis, but also each individual pattern is gone through step by step. What it looks like, what the criteria are, what makes it strong, what makes it weak, an example, and then some potential entry points based on whether you're an aggressive trader, you're more conservative, or somewhere in between. And then Advanced Trading Mindset is 6.5 hours of video on demand, and both of these are on demand. So it's not a live class, but it's on demand. It's all mindset. It's not only the challenges that we all bring to the table, the things that we have in our minds already that challenge every single one of us, and then also how to overcome those. In other words, how to get from where you're at today to where you want to be. And the beauty of both of these tools are that they're $229 for the first quarter. If you decide to renew, you can see at the bottom, renew them for just $99 a quarter. So at the end of the quarter, if you decide you want more time with it, or if you just like having it for reference, it's just 99 bucks. So if you've gotten it recently, I mean, Thomas, you just got it recently, it sounds like, at the end of your quarter, it's just 99 bucks to renew it. So if you like having it for reference, or you want more time to go through it, if you want to play with the flashcards, if you want to do the quizzes more, whatever the case is. So, and then if you want to get all 3 of them, if you haven't had any of them, this is the best deal. It's $9.95 for all 3. So you get a quarter of the insights, a quarter of patterns and flash, and a quarter of advanced trading mindset, and that saves you about 600 bucks by doing that. So if you do any one of these tools, patterns and flash, advanced trading mindset, or the insights, you'll also get my email address. You'll have access to me. If you have questions, shoot me an email. In fact, if you do, specifically, especially the insights, I mean, I love to get emails from you guys, and the comments, especially from Thomas, are great. I love hearing those because, frankly, Patterns of Flash I started developing it in 2007. We launched it in 2010, and to get that done from start to finish took about 2,000 to 3,000 hours, from pulling the charts to creating the videos to editing the videos to the quizzes to the development. And that was just my time, not including the development team that put it in place. So it's nice to hear those comments that say that you guys are getting benefit out of it. So, but the insight specifically, if you're coming there, regardless of what you join me in, which one of the tools you get, shoot me an email, let me know. Just say, hey, I'm in your insights, and let me know what it is that you're looking for, especially the insights, because the insights I have Patterns of Flash and Advanced Trading Mindset, they're basically done and in place. They're on-demand tools. They're there for you 24/7. They're available on your mobile. So if you're in jury duty and you're bored, you can watch videos. You can play with flashcards. You can do the quizzes. But the insights are a little more customizable because I'm recording them, 2 or 3 days a week. So if you have a specific request, if you have questions about anything, and I get this occasionally, people will send me an email saying, what about this? How do you do this? How do you do this? And I got a couple, a month or 2 ago at the same time that had 3 or 4 different questions. So instead of responding by email, I just said, you know what, multiple people probably have questions, and I figured the 2 different people had the same question. So I just put a bonus video together addressing each of their questions. And for me, it's easier to do that than it is to type a bunch of stuff out, not to mention the fact that I can visually now show what I'm talking about. And then it's just easier and better. I think it's not only easier for me, but it's a better form of learning. So if you join me in the insights, let me know what it is that you came for, because obviously you're signing up for you, signing up for me. You're signing up because there's something you want to get out of it. So let me know what that is specifically, and I will do what I can to address it very specifically in the insights. We can't get personalized, and if you say, hey, I'm looking at Microsoft, what should I do with it? I can't address that. If you say Microsoft's formulated a double bottom pattern, how do I trade a double bottom? Now we can talk about that in generic terms, if that makes sense. So that's that wonderful regulation we get to play with. But anyway, so yeah, shoot me an email. Let me know what y'all think. So So that is my time for the day. So I appreciate you all hanging out. And oh, Thomas, will it interfere with the lab? No. The Bill's lab is live. I think it's every morning. It's not, or Monday through Thursday. Patterns of Flash, as you know, is all recorded, all on demand. Advanced Trading Mindset is the same. Market Insights are also recorded videos that when I do them, I upload them, and they're there for you, available. I think they stay up for 10 days. I think they stay on the site for 10 days. So those are also on demand, essentially. So you watch them whenever they're there, whenever you have time for it. So, and I'll be uploading one or two later today. So to answer your question, it absolutely will not interfere with the lab. So, all right, did I miss anything? No, good, okay. Awesome. Thank you, Brenda. And thank you all for hanging out. Appreciate you being here, and we will see you all down the road. Y'all take care. Have a great day. Bye-bye.